The market doesn't warn you before it kills you. It just moves fast, silent, merciless. Every candle is a blade. Every decision, a wound waiting to happen. Most traders think the market is their enemy. But Jesse Livermore learned the truth. The enemy lives inside you, in that small voice that says, hold a little longer. Maybe it'll come back. That voice has buried more traders than any bear market ever could. Livermore's war wasn't against price. It was against hope. And to fight it, he built two unbreakable rules: stop loss, take profit. Simple? Yes. But so is oxygen, until you're choking without it. He used his stop loss like a sword, sharp, fast, without hesitation. The moment he was wrong, he cut. No emotion, no second chance. Because he knew hesitation is death disguised as patience. And his take profit, that was his armor. It wasn't greed that made him rich. It was knowing when to stop wanting more. He'd say, I don't aim to win every trade. I aim to survive every one. That's what people never understood about him. He wasn't obsessed with being right. He was obsessed with staying alive long enough to be right again. He didn't see SL and TP as numbers. He saw them as boundaries of sanity. One tells you when to walk away, the other tells you when to stop chasing. Both whisper the same message: control is profit. Every morning, he didn't pray for the market to go his way. He prayed for one thing: the strength to obey his own rule. Because he knew a trader without a stop loss isn't trading. He's gambling. A trader without a take profit isn't winning. He's feeding his greed. The market doesn't care about your dreams. It doesn't reward effort. It rewards discipline. And that's why Livermore lasted. While others blew up chasing the next candle, he waited for the market to speak. And when it did, he listened. He had one principle that kept him alive through every storm: decide where you'll bleed, decide where you'll breathe, before you even touch the market. That was his stop loss. That was his take profit, his shield and his sword, his peace and his punishment. Most traders chase money. Livermore chased clarity, because he knew the moment you enter without a plan, you've already lost, even if the trade wins. The market isn't about profit. It's about control. And your SL and TP, they're the borders between chaos and mastery. Every great trader finds this truth too late. Livermore found it in the ashes after losing everything. He came back, not smarter, just calmer. Because once you understand pain, you no longer fear it. You manage it. That's what stop loss is. Pain managed. And the take profit? Greed contained. Two numbers. Infinite difference. That's how he turned chaos into rhythm. That's how he turned fear into structure. That's how he survived, while everyone else tried to predict. So before you click buy, before you chase that perfect setup, remember what Jesse Livermore lived and died by. Your stop loss is your survival. Your take profit is your sanity. Everything in between is just noise. Jesse Livermore didn't trade the market. He traded his own emotions. His rule was simple but absolute. Control your losses, protect your profits. That was his compass through chaos. His SL, TP philosophy, a system built through pain, not theory. He understood that the market is a storm that rewards discipline and destroys hesitation. Every candle can make you or break you. But there's one defense that kept him alive through all the crashes, panics, and bubbles: his structure, his stop loss, and take profit. To Livermore, a stop loss wasn't just a setting on a chart. It was an act of surrender, a conscious decision to say, I was wrong, but I'm still alive. He placed it before every trade, not after. He never entered a position without first knowing exactly where he would exit if proven wrong. His logic was simple. If you don't know where the pain ends, you'll bleed until ruin. He began by studying the structure of price, the rhythm of highs, lows, and trends. He'd identify the key point that invalidated his idea. For a long trade, that was usually the last high or low, the spot where buyers last stepped in. If the price broke below it, he knew his idea was dead. For a short trade, the invalidation was the last lower high. Above that point, sellers were no longer in control. That's where he placed his stop, not where it felt safe, but where the market proved him wrong. Livermore never used fixed distances like 20 points or 1%. He said, "No stop can be universal. The market decides the size." In volatile environments, his stops were tighter because momentum could flip fast. In trending environments, they were wider because noise could easily shake him out. He always adjusted based on the average swing size of the instrument he traded. This kept his stop logical, not emotional. He also avoided obvious stop levels like round numbers or visible chart supports because that's where the herd placed theirs. He'd set his stop a few ticks beyond those zones, forcing the market to truly break structure before he accepted defeat. This small adjustment often saved him from false breakouts. Livermore believed your stop should represent the death of your idea, not your comfort zone. If the price reached it, he didn't hesitate. He didn't wait for confirmation or pray for reversal. He exited instantly because delay is emotional sabotage. He'd often say, "The market punishes hesitation more than it punishes error." That's the SL rule. Define it before entry. Place it where the trade idea dies, not where fear lives, and execute instantly when hit. No questions, no hope. And what about the take profit, the TP? To Livermore, TP wasn't about greed. It was about rhythm, patience, and timing. He said, "The big money is made in sitting, not trading." Meaning, the trade that pays isn't the one you chase. It's the one you let breathe. His take-profit system followed 3 stages. Stage 1. Identify your logical first target. This was usually the next major resistance or liquidity area, where trapped traders would begin taking action. For a long time, it was near old highs. For shorts, near old lows. Once price reached that zone, he would secure partial profits, usually 1/3 to half of his position. Stage 2. Move the stop to break even. The moment he locked partial gains, he protected the rest. This turned the position into a free trade. Zero risk, pure opportunity. From here, he could think clearly without fear of loss. Stage 3. Trail the remainder along the trend. Livermore didn't close winning trades too early. He used market structure trailing stops, moving the stop just below new swing lows in an uptrend or above new swing highs in a downtrend. This allowed the trend to expand naturally while locking in profits incrementally. He didn't chase tops. He let the market signal exhaustion. When momentum slowed, volume thinned, or price broke a key support in trend, he exited the rest. That's how he rode massive moves while avoiding greed traps. In short, his TP method was adaptive, built to ride strength, not predicted. His rule was simple. Cut the losses short, let the profits run, but never let the run turn into a reversal. Livermore's SL/TP system wasn't just mechanical. It was emotional discipline disguised as logic. Each rule had a psychological reason behind it. Stop loss equals emotional control. It stops hope from turning into destruction. Take profit equals emotional balance. It stops greed from turning into regret. Together, they form emotional symmetry. One boundary protects your sanity in loss. The other protects your satisfaction in gain. Livermore taught that every trade must be born from structure, live within limits, and die by plan. Before entry, he'd write down why I'm entering, where I'm wrong, stop loss, where I'll reward discipline, take profit, and how much I'm risking, no more than a small portion of capital. He risked only 1 to 2% of his capital per trade. His focus wasn't on being right, but on staying solvent long enough to be right eventually. He said, "A trader's job is not to predict. It's to survive until the market aligns with him." That's why SL/TP wasn't optional to him. It was the foundation of survival. He compared it to a diver's oxygen tank, invisible but vital. Without it, you drown in your own overconfidence. He used these techniques practically. In volatile sessions, he'd tighten stops closer to structure to reduce damage. In trending sessions, he'd let profits breathe by using wider trailing stops. After a series of losses, he'd cut position size in half. Discipline over ego. After big wins, he'd withdraw part profits, respecting the market's gift. Livermore understood that SL/TP was not just for capital control, but emotional reset. Every stop loss cleared his mind for the next opportunity. Every profit rebuilt confidence without arrogance. He journaled every decision, not to record wins, but to record behavior. He analyzed, was my stop logical or emotional? Did I let my TP plan play out or panic exit too soon? That journaling evolved his precision. Over time, he became less reactive, more mechanical, but never robotic. He blended data with intuition, anchored always by his SL/TP framework. He often said, "Markets are never wrong. Opinions often are." His stop-loss represented that acceptance. He didn't argue with price. He listened to it. His take-profit represented alignment, letting price reward patience before chaos returned. Livermore's rules can be summarized as his 7 laws of control. Always plan both exits before entry. Risk small. Never bet survival on one trade. Place SL at logical invalidation, not emotional safety. Take partial profit at the first market reaction zone. Trail winners as long as trend structure remains. Never move stops backward, only forward. Review each trade emotionally, not just financially. These rules form the practical skeleton of his SL/TP philosophy, but their soul lies in one word: discipline. Without it, even perfect analysis means nothing. Livermore's brilliance was never about prediction. It was about preparation. He didn't try to be right every time. He tried to stay alive every time. His stop-loss gave him humility. His take-profit gave him gratitude. And together, they gave him longevity. In modern markets, traders chase signals, algorithms, and strategies, but forget this foundation. Livermore's lesson remains timeless. Without a plan for loss and profit, you're not trading, you're gambling. So here's the solution, the modern Livermore application. Identify your structure point of failure. That's your SL. Identify your logical reward zone. That's your TP1. Scale out partially. Move SL to entry and trail the rest. Repeat with calmness, not emotion. Your goal isn't to win every trade. It's to protect capital long enough for your edge to manifest. Each stop-loss is tuition. Each take-profit is validation. Together, they build consistency, and consistency builds freedom. Livermore once wrote, "It's not the loss that kills you. It's refusing to accept it. That's the truth behind SL." And he also wrote, "It's not the profit that changes you. It's knowing when to stop. That's the truth behind TP. Stop loss, your humility. Take profit, your discipline. Between them lies mastery." That was Livermore's compass, the only way he navigated chaos and came out reborn every time. He didn't control the market. He controlled himself through structure. And that's the lesson every trader must learn. In the storm of uncertainty, your SL and TP are not just tools. They are your survival instinct, your emotional armor, your way of staying sane in a world that rewards madness. Stop when wrong, secure when right, and always live to trade another day. Fear when you're winning, hope when you're losing. That's the great inversion, the silent killer of traders. Jesse Livermore called it the emotional seesaw that destroys even the sharpest mind. He saw it ruin men who had perfect systems but no control over themselves. And he lived through it, not as theory, but as a wound carved deep into his soul. Every trader faces this paradox. When a position moves in your favor, fear takes over, the fear of losing what you've just gained. Your hands tighten, your breathing shortens, and your instinct screams, "Take it now before it vanishes." So you close too early, cutting the flower before it blooms. Then, when a trade goes against you, hope appears, sweet, toxic hope. You tell yourself, it'll come back. Just a little more patience. So you hold and hold and hold until patience turns into paralysis and the loss grows unbearable. That is the inversion. Fear in profit, hope in loss. The exact opposite of what's required to win. Livermore understood this truth long before psychology had words for it. He said, "The market is never wrong, but opinions often are, especially when driven by emotion." He realized that markets don't just test analysis. They test your ability to act against your emotional wiring. Every price tick is a psychological exam. And most traders fail it because they trade how they feel, not how they should. Livermore's greatest discovery wasn't technical. It was emotional. He found that success required reversing the natural order, replacing fear and profit with patience, and replacing hope and loss with acceptance. It sounds simple, but it's the hardest discipline in trading. The human mind isn't built for it. We evolved to avoid pain and protect gain. The market punishes both instincts. When you take profits too early, you suffocate your winners. When you hold losses too long, you let your ego burn your capital. That's why Livermore said, a trader's greatest enemy is himself. He saw it in others and in his own reflection. During his early years, he made a fortune by following momentum, only to lose it all when fear and hope reversed his logic. After every great win, he'd become cautious, even timid. He'd tighten his stops too close, exit too soon, and watch the trend continue without him. After every great loss, he'd become hopeful, desperate to make it back, taking reckless trades that ignored all structure. The pattern repeated, rise, fall, rebuild, until one day, he realized the truth. The market isn't there to reward emotion. It's there to punish attachment. That's when he turned to his rule-based approach, the SLTP philosophy, not as a technical framework, but as an emotional anchor. His stop-loss was not just about capital. It was about killing hope early. His take-profit was not just about money. It was about killing fear slowly. Livermore saw that fear and hope exist on opposite sides of the same weakness, attachment to outcome. The moment you attach your identity to a trade, you lose perspective. A red candle becomes an attack on your ego. A green candle becomes validation of your intelligence. You no longer see price. You see yourself reflected in it. That's when trading stops being rational and becomes emotional gambling. He said, the market is designed to exploit human emotion. Only by detaching can you survive. When you hope in a losing trade, you are resisting reality. You are saying, I refuse to accept that I was wrong. That's ego disguised as optimism. And when you fear in a winning trade, you are doubting reality. You are saying, I don't deserve this. That's insecurity disguised as caution. Both lead to ruin, one slowly, one suddenly. Livermore taught that true mastery begins when you no longer need to be right, only disciplined. The trader who embraces loss as information and profit as validation of process, not self-worth, becomes free. He structured his psychology the same way he structured his trades, with boundaries. When he took a position, he predefined his emotional space. He would say to himself, if I lose here, I learn. If I win here, I wait. Neither result defines me. That mental framework kept him calm through chaos. Because he knew panic and pride are two sides of the same trap. He often said, the moment you feel strong emotion in a trade, you've already lost control. Livermore analyzed fear and hope like a scientist dissects disease. Fear, he said, has one core pattern. It shrinks time. It makes traders act too early. They cut winners, cancel plans, or exit at the first retrace. Fear whispers, what if it reverses? So you exit at plus 2% while the move continues to plus 10%. Hope, on the other hand, stretches time. It freezes action. You hold losses, delay stops, and pray for reversals. Hope whispers, what if it bounces? So you watch a minus 5% drawdown turn into minus 20%, minus 30%, and then liquidation. Fear and hope are time distortions. Both break the rhythm of logic. To fight them, Livermore used structure and automation, not in code but in commitment. Before entering a trade, he would write 3 numbers: entry, stop loss, and target. Once price hit either boundary, he acted instantly. He called it removing the vote from emotion. The decision was made before the storm began. This small habit saved him countless times. It's what modern traders call mechanical execution, emotion-proofing your process. He also used scaling as an emotional tool. Instead of going all in or all out, he scaled out in layers. Taking partial profit reduced fear, and trailing stops reduced hope. It turned emotional extremes into manageable steps. This simple technique, scaling, was how he taught his brain to stay balanced under stress. Every partial exit reduced anxiety. Every partial hold maintained opportunity. In essence, he traded emotion with mathematics. Livermore's philosophy became psychological law. Cut losses fast, let profits run, because fear and hope must be reversed. When price is against you, don't hope, act. When price is with you, don't fear, hold. The irony is, the more you obey this law, the calmer you become. Because clarity replaces chaos. Once your rules dictate your actions, the market's noise loses power over you. He saw traders lose not because they lacked strategy, but because they couldn't obey it under stress. He said, a trader must be able to execute a plan when everything inside him screams to do the opposite. That's the test of real discipline, obeying logic when emotion demands rebellion. Livermore often described the pain of breaking his own rules. He recalled moments of deep regret, the nights staring at tickers, replaying decisions he could not undo. He realized that every emotional decision had the same structure. Fear made him sell strength. Hope made him hold weakness. The result was always identical: small wins, big losses. The cure was consistency. Every day, every trade, he practiced emotional neutrality. When in profit, he forced himself to stay patient. When in loss, he forced himself to accept it instantly. Over time, this rewired his mind to act against its nature. That's why he said, the secret of trading is not prediction, it's reversal, reversing your instincts. Fear and hope can't be deleted, they're human, but they can be contained. Livermore used reflection as his final weapon. After every trading day, he wrote what he felt, not just what he did. Was I afraid when I should have been confident? Was I hopeful when I should have been honest? These daily reflections revealed emotional patterns long before they became financial damage. Over months, he began to see that trading was not a battle of strategy versus market, but discipline versus self. And that's the real truth about fear and hope. They never disappear. They just change form. When you master them, they become signals instead of traps. Fear tells you where risk lies. Hope tells you what you're attached to. Livermore learned to listen without obeying. Fear reminded him to place stops. Hope reminded him to take profits. They became servants, not masters. The trader without rules lives inside this emotional inversion forever. Fear robs his profits. Hope drains his capital. He overtrades, revenge trades, moves stops, deletes plans, until the account becomes a mirror of his mental chaos. Every loss becomes personal. Every win becomes temporary. His chart becomes an emotional diary written in red and green candles. Livermore lived through that storm and built his compass, rules that turned emotion into structure. So here's the truth every trader must face. Until you reverse your emotional responses, you will always lose. Not because the market is unfair, but because it reflects your mind back at you. Fear when winning, hope when losing, that's the default of the untrained. Patience when winning, acceptance when losing, that's the discipline of the evolved. Livermore chose the second path, and it became his rebirth. His emotional death gave birth to control. He didn't eliminate fear or hope, he mastered their timing. Fear before the trade, when calculating risk. Hope after the trade, when planning potential. But once the position was live, silence. No emotion, only execution. That was his edge, the emotional neutrality that allowed clarity under chaos. Because the market doesn't destroy people, it simply exposes who they are. Fear and hope are not your enemies. Undisciplined reaction is. Livermore's final truth remains timeless. In trading, you don't conquer the market. You conquer yourself. When a trade turns red, the market stops testing your analysis. It starts testing your soul. The candles that once looked like opportunities now look like enemies. Every tick against you feels personal. Your heart beats faster, your breath shortens, and logic fades into noise. That's the emotional storm Jesse Livermore faced countless times, a storm that taught him the first and hardest rule of all: cut losses fast. To most traders, this rule sounds simple. To Livermore, it was sacred, a matter of survival. Because he knew one truth deeper than all others: you can always re-enter, but you can't rebuild from zero. Once your capital is gone, so is your chance to fight another day. And so, every red trade wasn't a defeat. It was a test of detachment, of how quickly he could accept being wrong without letting ego interfere. He used to say, "The market doesn't punish being wrong, it punishes staying wrong." That distinction was his edge. When a position turned against him, he didn't argue with the tape. He didn't pray for reversal or look for confirmation from others. He looked inward at the part of his mind that wanted to avoid pain and silenced it. Cutting a loss wasn't just about saving money. It was about preserving mental clarity. A small loss kept him sharp. A big loss blinded him. He learned this through pain, after watching fortunes evaporate, not because his analysis was bad, but because his pride refused to exit. Every trader faces this crossroad: accept a small, controlled loss now, or gamble on recovery later. Hope whispers, "It'll come back." Ego adds, "You were right, the market's wrong." Together, they create paralysis. Livermore learned to cut through that noise with one internal command: obey the stop. No hesitation, no debate. Because hesitation was poison, it turned a scratch into a wound. He viewed capital like oxygen underwater. Every second you wait while bleeding is one breath closer to suffocation. He would rather exit a position and re-enter than die defending a mistake. When his trades turned red, his inner dialogue was brutal but disciplined. He'd tell himself, "The market isn't against me. It's just proving my idea wrong. That's all." That mindset kept emotion from attaching to outcome. A loss wasn't failure. It was information. The stop wasn't punishment. It was protection. He built this detachment over years of repetition, forcing his mind to accept pain quickly instead of negotiating with it. Because every moment of hesitation, he knew, was capital slipping through his fingers. He believed that a trader's longevity depended on their ability to survive their own stubbornness. That's why he made cutting losses his first rule, not for strategy, but for psychology. Every red trade carried a message, but only if you had capital left to read it. He used to remind himself, "I can lose a battle, but I must not lose the war." The only soldiers who last in the market are the ones who know when to retreat. He'd rather lose small 10 times than blow up once. Because recovery is possible from small cuts, it's impossible from destruction. Livermore's stop losses were never emotional. They were planned before the entry. He'd study the chart, define where the setup would be invalidated, and place the stop there. No exceptions. He said, "I never allow a trade to turn into an investment." The moment a trade breaks structure, it's no longer what you entered. That's the moment to act. The market has spoken. If you argue, you lose more than money. You lose objectivity. He often visualized the market as an ocean. The waves are bigger than you, stronger than you, and utterly indifferent to your will. The stop loss is your lifeboat. Without it, you drown. Every trader eventually faces this truth. The market doesn't care about your belief, your analysis, or your hope. It moves. You either adapt or perish. Cutting losses fast is the act of aligning with reality before it crushes you. He also understood the psychological paradox that most traders delay cutting losses because they don't want to lock in pain. But what they fail to see is that not cutting is what locks in disaster. The moment you refuse to take a small loss, you've chosen to take a larger one. Livermore described this as the trader's illusion, believing that by waiting, you're giving the trade a chance, when in truth, you're giving your ego a noose. His internal process was mechanical. When price hit the stop, he didn't feel frustration. He felt relief. Because the uncertainty was over, clarity was restored. He could analyze, recalibrate, and wait for the next setup. Each stop trade was a reset, not a failure. That's what made him dangerous to the market. He never let one trade define him. His emotional energy wasn't wasted defending mistakes. It was preserved for opportunities. Cut losses fast wasn't about being right or wrong. It was about staying alive. Livermore said, "The market gives everyone second chances, but only to those who have money left to take them." Cutting early meant having cash for the next move, the move that mattered. Because every trend begins after the weak are forced out by pain. If you cut fast, you survive the washout and catch the next breakout. If you hold, you're the liquidity for those who do. Livermore knew that small losses were tuition, the price of learning how the market breathes. Each one was a whisper of truth. Big losses, on the other hand, were silence. They ended your ability to listen. So he paid small tuition often and stayed in the game. He'd tell his students, "Never be afraid of losing money. Be afraid of losing discipline." Discipline was the real currency. He developed a method to maintain detachment, risk per trade. He never risked more than a small percentage of his total capital on any position, typically 1% to 2%. That meant no single trade could destroy him. It allowed him to think clearly because survival wasn't in question. He turned stop-loss from a fear trigger into a freedom tool. By defining risk before entry, he removed emotional pressure during the trade. Once in, his job was to observe, not react. There's a saying, "Amateurs focus on making money. Professionals focus on protecting it." Livermore embodied that. His mind was wired for defense, not offense. He didn't chase glory. He chased continuity. He believed that a trader's power came not from wins, but from how little they lost when wrong. Because profit is built on preservation. The man who avoids ruin eventually outlasts those who swing for fortune. Inside every red trade, Livermore saw two voices, the emotional trader and the disciplined operator. The emotional one whispered, "Maybe give it more room." The disciplined one replied, "No, the plan said exit." The emotional one said, "It might reverse." The disciplined one said, "It might not. And I'd rather be out wishing I was in than in wishing I was out." That dialogue defined his maturity. Every time he obeyed the disciplined voice, he strengthened it. Every time he disobeyed, he paid for it. He often compared cutting losses to surgery. It hurts, but it saves life. A surgeon doesn't hesitate because hesitation costs lives. Likewise, a trader must operate swiftly without trembling. Pain is temporary. Paralysis is permanent. Livermore treated red trades like infections, contained them early, or they spread. He refused to let a bad trade infect his psychology. Once stopped out, he detached completely. He didn't watch the chart. He didn't hope it would come back. The trade was dead. Lesson logged, emotion cleared. That mental reset was how he stayed sharp. He viewed losses as inventory costs, part of doing business. Just as a store owner accepts spoilage or waste, a trader accepts losses. But a store owner who ignores waste goes bankrupt. Similarly, a trader who ignores stops is doomed. This reframing kept him from taking losses personally. The goal wasn't perfection, it was sustainability. Livermore also taught that the faster you cut, the faster you recover. A small loss keeps emotional stability intact. A big loss poisons confidence. It clouds judgment, fuels revenge trading, and destroys rhythm. That's why his first rule wasn't make money, but keep your losses small. Money flows to those who can stay emotionally balanced long enough to capitalize on opportunity. He'd often reflect after a stopped trade. Was I wrong in direction or in timing? This helped him separate error from randomness. Sometimes the setup was right, but the market wasn't ready. Cutting the loss allowed him to re-enter later, fresh, clear, and positioned correctly. That's what he meant by you can always re-enter. The best entries often come after the pain of being wrong, but only if you still have capital and clarity left to act. Livermore's discipline to exit without hesitation came from a deep understanding of impermanence. He knew every trend, every pattern, every setup, all temporary. Nothing lasts. The faster you accept that, the easier it becomes to exit gracefully. Emotional traders fight impermanence. Disciplined traders flow with it. Cutting losses fast was his act of surrender. Surrender not to the market, but to reality. He often said, "There's no such thing as a bad loss, only a delayed one." The longer you delay, the more it costs. That's why he built his entire system around predefined exits. His charts had no room for hope, only numbers and structure. If a trade hit the stop, he was out before his heart even reacted. That automation wasn't about speed, it was about sanity. His legacy teaches one timeless truth. Trading isn't about predicting moves, it's about surviving mistakes. Cutting losses fast isn't cowardice, it's courage. The courage to admit error and protect your future. The market rewards honesty and destroys denial. Livermore mastered that honesty. He lived by this mantra: capital first, ego last. That's the order of survival. He didn't need to win every battle. He needed to remain on the field. The trader who keeps his capital keeps his freedom. The one who loses it loses everything: clarity, confidence, identity. Livermore understood that capital wasn't just numbers in an account. It was emotional energy, the ability to stay calm under pressure. And so, every time a trade turned red, he repeated his rule: cut it, clear it, move on. He didn't mourn losses, he respected them, because they reminded him of his humanity, of the thin line between confidence and chaos. He knew that without this rule, all others collapse. The emotional storm never disappears. It visits every trader again and again. But Livermore learned to welcome it, because within that storm, he found the one thing that separates the amateur from the master: the ability to let go quickly, cleanly, and without regret. That's the power of Rule 1. You can always re-enter, but you can't rebuild from zero. Survival is the true skill. Everything else is just noise. When most traders see green, their hearts start a race, not from greed, but from fear. The fear of losing what they've just earned. The candles rise, their balance looks beautiful, and yet a voice whispers, "Take it now," before it disappears. That voice has destroyed more potential millionaires than any red candle ever could. Because in trading, the real challenge isn't surviving losses, it's surviving success. And Jesse Livermore understood this better than anyone. He once said, "It was never my thinking that made big money for me. It was always my sitting." That line wasn't about laziness. It was about emotional discipline, the courage to do nothing while your plan unfolds. Livermore knew the market rewards those who can wait, those who understand that time, not action, is the multiplier of profits. When he caught a trend, whether it was the early rally before a bull run or the collapse before a crash, he didn't exit because of excitement or fear. He exited when the trend told him to. Every move had its rhythm. The market breathes, expands, contracts, and Livermore learned to breathe with it. Most traders suffocate their own trades. Livermore's preparation extended beyond charts. He'd spend hours analyzing market conditions, the tape, the volume behavior, and intermarket relationships. He believed that context was everything. A setup meant nothing if the environment didn't support it. Before acting, he'd ask, is the market trending or ranging? Are the leaders strong or weakening? Is liquidity high or drying up? Each answer shaped his plan. He didn't force trades into random environments. He waited for alignment, when technical, emotional, and psychological conditions all converged. He saw trading as a war between patience and impulse. Planning was how he strengthened patience. Impulsive traders relied on adrenaline. He relied on structure. Every plan became a promise, a contract between his logic and his emotions. Once signed, it couldn't be broken. That's why he rarely checked the market mid-trade. His plan was already set. The outcome didn't need his interference. "I made my decision before I entered," he'd say. Now the market decides the rest. To Livermore, the act of planning wasn't just about control. It was about liberation. Most traders think rules restrict them, but in reality, rules free you. They free you from overthinking, from doubt, from chaos. Once you have a plan, you don't have to decide anymore. You just execute. And execution without decision is clarity. That was Livermore's true edge, not predicting direction, but eliminating confusion. He also believed that planning gave meaning to loss. When you lose according to plan, it's not failure, it's data. You can study it, refine it, and improve. But when you lose without a plan, it's chaos. You don't know what went wrong because you never defined what right looked like. Livermore journaled every plan, win or lose. He reviewed them weekly, not to find perfect trades, but to find consistent behavior. His journals weren't about profit. They were about process. Because profit, he said, is a symptom of a process done right. His trading room reflected that mindset: clean desk, quiet air, one focused mind. Charts were drawn by hand, notes pinned to the wall. Each trade idea was reviewed for alignment with his system. If it didn't match his criteria, he deleted it, no attachment. He believed cluttered preparation led to emotional confusion. When your table is messy, your mind is too, he once told a fellow trader. This discipline gave him something few traders ever achieve: peace. The market's chaos couldn't break him because his structure was stronger. Every trade was a mission, every plan a compass. And that compass kept him alive when others drowned in noise. So, when a trader today rushes into a position because it looks good, Livermore would smile, not out of arrogance, but empathy. He'd seen that excitement before, in himself, years earlier, when he traded from instinct instead of intention. He learned the hard way that no setup, no signal, no news matters if you haven't defined what you'll do when the market turns. Planning, to Livermore, wasn't optional, it was sacred. It separated those who react from those who command. The impulsive trader enters chaos and calls it intuition. The prepared trader enters structure and calls it execution. One prays, the other acts. In the end, his ritual before battle was never about predicting the market. It was about mastering himself. Every plan was a reflection of his discipline, his patience, and his understanding that control isn't about dictating what happens. It's about being ready for whatever does. That's why Livermore's rule still echoes today: plan before you act. Because when the market moves, thinking is too late. I made my decision before I entered, he'd say. Now the market decides the rest. To Livermore, the act of planning wasn't just about control, it was about liberation. Most traders think rules restrict them, but in reality, rules free you. They free you from overthinking, from doubt, from chaos. Once you have a plan, you don't have to decide anymore. You just execute. And execution without decision is clarity. That was Livermore's true edge. Not predicting direction, but eliminating confusion. He also believed that planning gave meaning to loss. When you lose according to plan, it's not failure, it's data. You can study it, refine it, and improve. But when you lose without a plan, it's chaos. You don't know what went wrong because you never defined what right looked like. Livermore journaled every plan, win or lose. He reviewed them weekly, not to find perfect trades, but to find consistent behavior. His journals weren't about profit, they were about process. Because profit, he said, is a symptom of a process done right. His trading room reflected that mindset: clean desk, quiet air, one focused mind. Charts were drawn by hand, notes pinned to the wall. Each trade idea was reviewed for alignment with the system. If it didn't match his criteria, he deleted it, no attachment. He believed cluttered preparation led to emotional confusion. When your table is messy, your mind is too, he once told a fellow trader. This discipline gave him something few traders ever achieve: peace. The market's chaos couldn't break him because his structure was stronger. Every trade was a mission, every plan a compass. And that compass kept him alive when others drowned in noise. So, when a trader today rushes into a position because it looks good, Livermore would smile, not out of arrogance, but empathy. He'd seen that excitement before, in himself, years earlier, when he traded from instinct instead of intention. He learned the hard way that no setup, no signal, no news matters if you haven't defined what you'll do when the market turns. Planning, to Livermore, wasn't optional, it was sacred. It separated those who react from those who command. The impulsive trader enters chaos and calls it intuition. The prepared trader enters structure and calls it execution. One prays, the other acts. In the end, his ritual before battle was never about predicting the market. It was about mastering himself. Every plan was a reflection of his discipline, his patience, and his understanding that control isn't about dictating what happens. It's about being ready for whatever does. That's why Livermore's rule still echoes today. Plan before you act. Because when the market moves, thinking is too late.